Okay, current status of the deal. So first of all, before I get into this presentation, obviously the thing that's front and foremost for everybody, all shareholders and the company itself, is when will we relist and the extended time this transaction has taken. So obviously when we commenced this transaction, we did not anticipate that it would take this long. But unfortunately, both times we went to market with the transaction last year, we hit difficult periods in the market and we were unable to close. Now, why have we persisted with the transaction? A number of reasons. One, the board firmly believe in this project, firmly believe in the value that it's going to create for Comet shareholders. And so at each time we had to make a decision, we felt it was best to continue. And secondly, each time we had to make that decision, we had a clear mandate from shareholders where they had voted in favour of the transaction in the EGMs that we'd had in the past. So had we not had that mandate, we would not have continued, but we did, and we believed it was the right thing to continue because of the potential value this transaction can create for the company, and so we have persisted. That said, I know it's been difficult for all shareholders. It's also been difficult for the company, but I feel we're coming out into a better market right now. We have a new broker lineup, which is stronger than previous. The copper market has turned positively in our favour, and there's been some very good news overnight on the PMI. The Chinese PMI was up strongly, which is an indicator of purchase managers' intentions in China. When it's above 50, it's positive, and it was 52, which is quite a strong result actually. So I feel we're in a better market now, and we're doing everything we can to close this transaction now. Another key question that's come up, which I'll address up front, is when are we relisting? Well, the indicative timetable that we put out is the 13th of April. That is dependent, of course, upon primarily us closing the capital raise, approval of the transaction at a shareholder meeting, which is scheduled for the 27th of March. And then subsequently the ASX processing our documentation and getting us relisted, which obviously we don't control that, so that's why there's not an exact date there. So we're estimating 13th of March at the moment, April, I should say, and that's what we're working towards. So in terms of the current status of the deal, we have revised the structure further coming to the market this time. So there's been two major changes in the deal structure as we've gone through, and both of those changes have been to address market conditions or market feedback. So originally, you will recall, this was a straight $50 million equity raise. We subsequently changed that when we got Glencore to agree to provide $27 million in debt for us to partially and majority fund the environmental rehabilitation bonds that have to be replaced upon close of the transaction. And that was the revised structure that we went to market with in Q4 last year. The changes that we've made moving into this year have been to essentially address capital structure concerns that came up from potential investors last time, and they primarily relate to shares and options being provided to the SPV shareholders. Now, if you recall, there's an SPV required in this transaction because Glencore required $5 million upfront payment. We couldn't do that because Comet can't make any payment pursuant to this transaction until it goes through the full approval process with the ASX, because this is a re-compliance transaction for us with them, where we're going through essentially the IPO process again. So there had to be an intermediary in SPV which raised that money and made that payment to Glencore. So we've addressed that feedback from the market, and primarily what we did was we eliminated around about 50 million options, which were essentially going to those SPV shareholders. And we've also asked them to all engage in escrow agreements where they'll agree to not sell their shares for the first 12 months. Both of those things are very positive from a market perspective because it reduces the dilution with the options, and it also provides a stronger capital structure or a tighter capital structure on relist, both things that funds in particular look for. So as I said, we've made those changes. We've got a better market. We've got some different brokers engaged on the raise right now. So we're joined in the raise this time by Shores, which is a national brokerage firm here in Australia, and also a very strong firm called Aitken Mount Capital Partners. And then we have Peloton continuing on as well. So we've got a strong broker lineup. The prospectus has been lodged last Friday now. We're just waiting for essentially end of half year reporting by all of the major companies. And then next week we're off to the races in terms of that, setting up meetings, having meetings with the potential investors for this equity raise we're seeking to close. So that's really everything on the status of the deal at the moment, the most pertinent sort of facts. And as I said, we're working through that now, that process to raise the money first of all. Then there'll be the shareholder meeting, assuming the transaction gets approved there. And I'll address some of the reasons why I believe you should approve that today. We then just go through essentially what it's a paperwork process with the ASX to relist. And as I said, sort of, mid-April is around about where we're timing that at the moment, or estimating that based on the steps that need to be complete. So just a refresh of the deal itself, and importantly, sort of why is the board proposing the transaction? Why do we continue to propose the transaction? So obviously, I've presented this a couple of times to investors already, and I would ask you to refer to some of those earlier presentations for more detail if you want, because I don't aim to go over everything in the same level of detail. But essentially, the high level is we're purchasing a past producing copper mine in Queensland, so in a tier 1 jurisdiction from Glencore. It's in fantastic condition, so it's been maintained, all of the licenses, it's on permitted mining licenses, which is a massive, massive boost for any company, because permitting mines is a very difficult process. Permitting the ML itself is very difficult, and if you have to go through a native title process, that is also time consuming as well. So being on permitted MLs is a huge plus for the project. It has a large existing resource of 13 million tonnes at around about 1% copper equivalent. It was mined previously. It produced successfully export quality concentrates. We know that there's a lot of exploration upside here. I think the drilling, which will commence immediately upon close of the transaction, because being on permitted MLs, we can drill straight away. You don't need any further permits from the government. So we've got a drilling company lined up. We'll start straight away. We'll have the drill bit turning. We'll have exciting, I believe, drill results and assays coming out, leading up to what we believe is going to be a very, very material increase in resource size on our first JORC resource, which we're estimating will be in around about 6 months. We then have a pathway through to restart of production, whereby we can toll treat the material at the plant that it went through before, which is the Ernest Henry plant, which is 7 kilometres to the west of the mine site at E1 in the project area there. They have excess capacity. We've had good dialogue with them. We believe that we'll be able to make an agreement with them to toll treat the material there. And so you have an ability here, because you're on permitted MLs, to go through this process of drilling into a resource upgrade, doing our internal studies, so the PFS and the DFS, and then a mine restart, and having that all happen within 24 months. There's no other projects that I know of that have all of the scale that we see in this project on permitted MLs with past successful production in a tier 1 jurisdiction and in a tier 1 mining country. So it literally ticks the boxes on everything at the project level. What we also have here is a dynamic evolving in the copper market, which was the reason that we got involved with this copper project in the first place, and why we as a company like copper, we have obviously 2 other copper projects as well. Now we're starting to see that play out in the market right now. Last night, as I said, the PMI, the Chinese PMI, was very strong. Copper price went above $9,000 a tonne again. We see all of the analyst forecasts coming out, and the analyst forecasts are generally between $10,000 and $13,000 a tonne for copper in the next few years. Now, even at the bottom end of that forecast, that is a very, very strong copper price historically. And on a successful return to mine should see us having a mine that generates strongly positive income. At the $13,000 price level, well, that is really sort of like uncharted territory, but it's not an uncommon forecast amongst analysts at the moment. And why are they forecasting that? It's primarily driven by two things. One, an upcoming supply deficit, so copper supply is not increasing, and also copper demand is increasing through the additional demand required to support the decarbonisation of transport networks and generation of renewable energy. And you'll have all seen that in the news, of course. That is playing out in the market now, and there's a strongly positive feeling about copper in the near term, the mid-term, and even the long term. So fundamentally, the asset is great. And also you have a time here for the primary commodity, which is gold in this project, entering a period where we see sort of strong prices being supported throughout the midterm and into the long term. So that's why we're still very, very positive about this deal. We think that this can really be a game changer for the company. We've always thought that. We're becoming more confident as we move into this copper thematic seems to be playing out in the marketplace now as we forecast. And that was the reason we got involved in the first place. And so we think this could be massively value accretive for all shareholders. That's why we're still pursuing the transaction. So why should shareholders support the deal though? Well, in my opinion, it's best for all shareholders. And I say that understanding that you all should make your own decision based on what is best for you. Companies are essentially democracies. That's the way the shareholder votes work. Everybody has an equal vote for one share. But I say it's best for all shareholders because even if you don't like the transaction, and you're frustrated, and I understand there are a lot of frustrated shareholders out there. I'm also frustrated. But the best thing is to complete this transaction, because if I were to lose you as a shareholder, I don't want that, but I know that some people will just want to sell their shares and exit when we relist. It's far better for you to do that under a situation where this transaction is closed. We'll have a better share price, we'll have stronger liquidity. So if that's the camp that you're in, I think you should still vote for the transaction. And if you are in the camp, the majority of shareholders are or were in the past when we voted on this, you should continue to support the transaction because the fundamentals for this deal are moving in exactly the direction that we thought they would. Things are getting better for copper. The Australian assets and the Australian copper market has tightened up. It looks like the transaction for Oz Minerals will complete, and Oz Minerals is being bought by BHP, of course. Oz Minerals is the last major pure play copper producer left in Australia, so it's the only one not owned by the majors, basically. That will take that out of the market. That makes projects like ours even rarer and even more in demand. And so things are getting better. And I do see an extremely bright future for the company if we can close this transaction. I'm just going to move on now onto shareholder questions, or ones that I haven't addressed so far throughout the webinar today. First one is, what financial commitment are the board demonstrating to shareholders? So as I mentioned in prior webinars, and as you will see in the prospectus and also the notice of meeting, because we require shareholder approval for this, is all board members plan to invest $50,000 into the IPO, or RTO it really is, so relisting process. Additionally, we will look to buy shares on market once the project is relisted to provide even more positive sentiment for the share price post relisting. Additionally, as we've been working through this process, we're working for reduced or no compensation across both the board and all of the management of the company as well, to make sure that the company has the funds to close this transaction. So there certainly is a lot of financial commitment and a lot of financial support from the board all the way down through management of the company. Somebody's asked, what's the progress of the Gulf Creek Copper Mine at Barraba? So as you would all know, we went through, unfortunately, a very long and drawn out process at Gulf Creek to get approval to explore there. It was only in around about Q3 last year that we finally got approval to commence exploration there. Now, by that time, of course, we've been involved in this transaction for around about 6 months at that stage, and we didn't have the funds on hand to commence exploration and fund that exploration and also pay for the completion of this transaction. So what we're looking to do is complete this transaction. You'll see in the prospectus there's $1 million in there for existing projects that will primarily go to drilling at Barraba. Another question is, does Comet hold any other assets or prospects? So yes, we do. Obviously, Barraba, which we've just spoken about. So that's our copper project in New South Wales, which is also a historically producing project. It's a different style of mineralisation. It's a VMS in terms of the IOCG style deposit. It's also a lot smaller than the project, at least based on the information we have at the moment, than the project we're looking to acquire in Queensland. In addition to that, we have some exploration licenses for copper in the Northern Territory. And we also, our main asset, of course, is the shares that we hold in International Graphite. We got $8 million worth of shares in that company at the listing of International Graphite. Those shares are escrowed for Comet for 24 months. So we cannot sell any of those shares until April 7th of 2024. But I'm obviously on the board of International Graphite. That company has been executing almost flawlessly. So since IPO, everything they said they would do has been done, and the results have been very favourable. So the drilling's been done on time. The drilling results have been favourable. Initial MET testing's been done. The MET testing results were favourable. That's on this on these new areas that have been drilled. Obviously, we had very favourable MET work on the historical resource as well. And so they're executing. It's a company that's picked, I think, the right commodity and also the right area in terms of where they've put their project or their facility, which is in Collie in WA. And that's basically going to be the renewables hub of Western Australia. So I'm expecting a lot of positive things to happen for International Graphite in the next 12 months. And I think our shares there, which are sort of like based on recent trading ranges, have been worth from sort of like 10 to up to sort of 15 or $16 million, will be worth possibly even more than that at the time that we come out of escrow next year. Another question was, why do my shares have no value? Or actually, they're worth a minus value after the consolidation / split. So you'll recall in the prior EGM that we had late last year, one of the resolutions that was voted on was to approve the consolidation of the shares. It was a 10-to-1 consolidation. Now, this was required because when you go through Chapter 1 and 2, so the re-compliance with listing rules, with the IPO rules for the ASX, which was a condition of us completing this transaction, you have to have a minimum share price of 20 cents. That's the ASX rule. We were 2 cents when we closed, so we had to do a 10-to-1 consolidation to get the 2 cents up to the minimum required 20 cents. That was approved by shareholders last year, and then that has subsequently been executed because once it's approved, it has to be done. It was done in the timeline required by the ASX, so we are now a 20 cent a share company upon relist. Now, the comment that your shares have no value or the value has changed or the value is less is false. The value is exactly the same. You have 1/10 the amount of shares, but they're worth 10 times the price. So the value, the overall dollar value of your shareholding is exactly the same. So that's, I think, something that confuses people sometimes, but that's not factual. Your money is exactly the same, and surely you would understand that regulators, the ASX, etc., would not let the company undertake any kind of action which essentially reduced the value of your shareholding just through a consolidation or a split. That's all the questions I had here at the moment. Evie, do you have has anything else come up throughout the presentation today?
No, Matt, that's it. I don't know if there's any last minute questions. We'll just give everyone that is online now just a minute. If they've got any more, please submit through the Q&A button down the bottom and I'll read them out and Matt can address them. So let's just give them.
Sorry, I actually missed one because it came through via email rather than the thing. So I'll just answer that one first while people are
thinking about
So this was how are the other projects progressing? I already spoke about Barraba. So with that, we obviously had to complete that native title processing at the permitting. That's done, and I explained that we'll be drilling that as soon as we close this transaction. In terms of the Northern Territory projects, we've just been doing desktop work on those. The prior planned visits to the Northern Territory to conduct our first sort of like field work up there all had to be cancelled because at that stage we were still in COVID with border closures changing every time we scheduled it. The WA and Northern Territory border closed again. So once we got past all of those border closures, though, we were in this process with this transaction. And so again, within that $1 million on existing projects, it's in the prospectus for the use of funds. There is money in there to go and conduct those initial field reviews there at the Northern Territory projects. And of course, I've addressed it into the other project, I suppose, being our shareholding in our international growth. I've already spoken about that. They've asked, what's the timelines for their development? So there's no timelines for development of the Northern Territory or the Barraba project at the moment. They're both exploration stage. So we've got to conduct exploration there before we know whether there's resources that would justify any development. That's completely different to this project that we're looking to acquire at the moment. We know this is going into development. All we're doing is drilling out the resource at the start, proving up a much larger resource, which I'm sure is going to excite you all when you see it, and then going back into production. And that is why, as I've said before, this is such a quality asset. It is really a rare asset for a company like us to get. And another thing I just would like to address there that I forgot to address actually on the project itself is, I know that there's been some discussion amongst some shareholder groups about the asset itself, and some people were questioning whether there is a good copper deposit there or not. I would invite you, if you are would like to have a look at the independent geologist's report. So one of the things that's nice for shareholders about the fact that we have to go back through this approval process with the IPO is it requires a full prospectus, which includes an independent technical report by an independent geologist. Have a read of that. They are very positive about this deposit. They are, as I said, independent. They also have, of course, legal liability for misstating anything, so they generally tend to be quite reserved in these reports. He's still, I think, quite positive about it. So that I think is something that you should look at if you've got questions about the deposit. Also, there's been questions about what our relationship with Glencore is. Our relationship with Glencore is extremely positive. So Glencore will be a shareholder in this company upon close. They'll be an 8.2% shareholder. They've also loaned us $27 million to, as I said, primarily fund those bonds. Now, we all know that Glencore is a large multinational corporation. They don't throw their money around stupidly. The only reason that they are accepting equity in Comet as a part of this deal and loaning us $27 million to help get this thing back into production is because they strongly believe this is going back into production. And so when you have that level of confidence from a multinational that has owned this asset in the past, and they're co-investing with us essentially to put it back into production, I think that should give everybody a lot of confidence about the asset quality, and then the likelihood of this going back into production.
There was, sorry, Matt, there was one question from Philip Caldwell that has come through. What is your current estimate in brackets range of per tonne break even production price at Mt Margaret? So the break even production price.
So it's very hard to estimate at this stage because we have not done any scoping level studies or PFS studies or anything like that. We have built for our own edification internal financial models, but they're at a confidence level at the moment that's really too low for us to go out and publicly say anything about what we think the production price might be. I can say this though, it's demonstrating to us that it should make money in price environments that we anticipate moving forward. So unfortunately on that, I have to wait until we go through proper studies that have been properly validated until I can provide that level of detail.
Unless you've got any more.
There was just one more there, continuation of this one was, where do I see the company in 6 months, 12 months and 2 years? And so really there's two answers to that. One, if we close this transaction, then I see it 6 months as or there and about, announcing a substantially larger resource for the Mt Margaret project after a very successful drilling program. In 12 months, I see us having the PFS done and be working on the DFS. And in 2 years' time, I see us being back in production at Mt Margaret. Now, should we not get this transaction either approved by shareholders or for some other reason the transaction doesn't complete, then the pathway is different, of course. In 6 months, 12 months, 2 years, it's a little harder to say what we'd be doing. I think short term, what we'd be doing is obviously raising some money to go out and drill Barraba, but then we have to see what those results are like. And so it's too hard to say in that scenario where we are in 12 months or 24 months. But definitely in the scenario where we close this deal, I see a very clear timeline, as I just outlined, of very positive events in what I think we'll see is going to be a good copper market. It's just a question of how good. And that's really estimated, yeah, that's really demonstrated in the consensus analyst forecast where they have copper prices ranging from sort of, $10,000 to $13,000. All of those are good outcomes for the company. So again, that's one of the main reasons why we continue to support this transaction. I know it has been a difficult process. We did not anticipate that it would take this long. One of the things about this process that has been so hard is that when we hit market conditions that have been headwinds, and in some cases very strong headwinds, you have to readjust the transaction to basically accommodate those changes in market. The thing is, when you're doing this re-compliance under the ASX listing rules, you can't be very nimble in doing that. You have to go back through the process with the ASX, and that takes months, unfortunately, and there's nothing we can do about that. That is also one of the reasons why it's been difficult for me to communicate with you guys on a more regular basis, because I can't say anything until I have things approved by the ASX and I know where we stand. Each time we have, I get back up here and give you an update. It's just that in the interim or in the intervening periods, we've often been in a state of flux where I'm not certain where we're ending up, and therefore it's impossible to provide an update at that stage. So I think that's all for today. If there are any further questions that come up post this, feel free to email them through to the company email. And apart from that, we move forward. I'm looking to get the fundraising done, and then hopefully we vote this transaction through on the 27th, and then it's onwards and upwards. I really honestly do see a bright future for the company if we close this transaction. So
sounds great, Matt. So a little bit more patience from everybody across all channels here, and plenty of upside for Comet to come.
That's it.
Great. Thank you so much. I have recorded this, so I will get this out to our shareholders and across our social media channels.
Okay, great.
Thanks, Matt.
Thanks, everybody.
Bye.
Bye.